Imagine this. You're given a choice: access to the world's top financial advisors, the ability to invest in the most exclusive hedge fund, or the power to buy into the next big startup before anyone else. What would you choose? Most people would jump at the chance to make a fortune through complex investments. But billionaires like Warren Buffett, Ray Dalio, and Jack Bogle do the exact opposite. Instead of chasing high-risk opportunities, they rely on one of the simplest, most underrated investment strategies: index funds. But why? Why would some of the richest and smartest investors in the world trust something so basic? Because hidden within index funds is a powerful wealth-building secret, one that has quietly outperformed most hedge funds, requires almost no effort, and can turn even a modest investment into millions over time. Yet, despite its simplicity, the strategy remains one of Wall Street's best-kept secrets, one they don't want you to know. In this video, we're breaking down why billionaires trust index funds over complicated investment, the secret power of index funds that quietly beats Wall Street's smartest traders, how you can use this exact strategy to grow your own wealth effortlessly. And trust me, you don't want to miss this, because by the end of this video, you'll understand why the wealthiest people in the world don't try to outsmart the market. They simply own it. The billionaire's best-kept secret. Let's start with a billionaire who could buy anything: Warren Buffett. The man is worth over $100 billion and has spent a lifetime studying the stock market. Yet in his annual letters to shareholders, Buffett consistently says that if he could only give one piece of financial advice to the average investor, it would be this: put your money in a low-cost S&P 500 index fund and forget about it. Sounds too simple, right? But here's what most people don't realize. Index funds quietly outperform the vast majority of actively managed investments. While traders and hedge fund managers stress over market fluctuations, index fund investors sit back and watch their money grow over time, and they end up winning in the long run. Even Buffett himself made a $1 million bet back in 2007. He challenged the best hedge fund managers to beat a simple S&P 500 index fund over 10 years. The index fund won by a landslide. Why? Because most people try too hard to outsmart the market, but billionaires know that time in the market beats timing the market. The power of passive investing. The beauty of index funds is that they don't chase short-term trends. They own the entire market. An index fund is like a basket of the top-performing companies. Instead of picking individual stocks and hoping they go up, an index fund automatically spreads your money across hundreds of the biggest, most successful businesses in the world. Take the S&P 500 index, for example. This single fund gives you ownership in companies like Apple, Amazon, Microsoft, Tesla, and Google, all in one investment. And here's where it gets interesting. Over 90% of active traders fail to beat the S&P 500 over the long run. The average hedge fund charges massive fees, eating away at profits, while index funds keep costs minimal. Index funds compound wealth over time, letting you build riches without constantly managing your portfolio. The best part? You don't have to do anything. Just set it, forget it, and let time do the work. How billionaires use index funds to grow wealth. So, how exactly do billionaires leverage index funds to build and protect their wealth? While they have access to private investments, hedge funds, and exclusive financial opportunities, many of the world's richest investors still rely on index funds as a core part of their long-term wealth strategy. Take Warren Buffett, for example. Despite being one of the greatest stock pickers of all time, Buffett has repeatedly stated that index funds are the best investment for most people. In fact, he has left instructions for 90% of his wealth to be invested in an S&P 500 index fund for his wife after he passes away, ensuring that her money continues to grow with minimal risk. Then there's Ray Dalio, the billionaire hedge fund manager and founder of Bridgewater Associates. Despite decades of studying market trends, he still recommends a simple, diversified portfolio centered around index funds, calling passive investing one of the safest ways to build long-term wealth without getting caught in market swings. And we can't forget Jack Bogle, the creator of index funds, who revolutionized investing by proving that owning the entire market beats trying to outsmart it. His Innovation has allowed millions to grow their wealth steadily without stress or hefty advisor fees. These billionaires don't gamble. They invest with patience, knowing time in the market is more powerful than timing it. The strategy is simple. Buy, hold, let it grow. And the best part? Anyone can do it. How you can use the strategy. If billionaires trust index funds to grow and protect their wealth, why wouldn't you? The best part about this strategy is that it doesn't require expert knowledge, constant monitoring, or large sums of money to get started. Anyone, regardless of their financial background, can take advantage of this simple yet powerful investment approach. To start, you'll need to open an investment account. Some of the best options include Vanguard, Fidelity, or Charles Schwab, as they offer low-cost index funds with minimal fees. These platforms are widely trusted and provide easy access to the best-performing funds. Next, you'll need to choose a low-cost index fund. The most popular choice is the S&P 500 Index Fund, which tracks the top 500 companies in the U.S. Some of the best options include VOO, Vanguard S&P 500 ETF, SPY, SPDR S&P 500 ETF, or VTI, Vanguard Total Stock Market ETF. These funds give you exposure to the largest, most successful companies in the world, allowing you to own a small piece of every major business without picking individual stocks. Once you've picked your index fund, the key is consistency. It doesn't matter whether you invest $50 a month or $5,000. The most important thing is to invest regularly and stay consistent. Over time, your money will compound and the value of your investments will grow. And here's the simplest yet most effective step. Do nothing. That's right. Once you've invested, the best strategy is to let time do its magic. Don't panic when the market drops. Don't try to time the highs and lows, and don't get caught up in short-term noise. History has shown that the market always recovers and grows stronger over time. Still not convinced? Just look at the numbers. The S&P 500 has averaged around 10% annual returns for over 90 years. Even after major crashes and recessions, the market has always bounced back and reached new highs. The biggest mistake investors make is not investing at all. By following this simple strategy, you can build wealth just like the billionaires do, without stress, without constant effort, and without having to gamble on risky investments. The sooner you start, the more time your money has to grow. So, why wait? Don't wait to start. Let's be real. Building wealth doesn't have to be complicated. Billionaires understand that index funds are the safest, most reliable way to grow money over time. And the best part? Anyone can do it. So the question is, will you start today? Or will you keep waiting while others build their wealth? The choice is yours. If you found this video valuable, make sure to hit that like button, subscribe, and drop a comment below. What's your favorite investing strategy? Let's build